What is up guys, my name is Ignas, welcome back to the channel. This week we made a dividend comparison on several names from the railroad industry, and there was one stock that had better metrics than the rest. The name is Union Pacific Corporation, ticker symbol UNP. So today I want to take a deeper look into it. The stock is now down for 14.04% on the year to date, but if we zoom out for a bit of a longer term, in 5 years it is up nicely, plus 84.2%. Now it is a large company, its market cap is $131 billion US. The stock is trading at a price to earnings ratio of 18.99, and this year with the price moving a bit lower, the dividend yield has been moving up now at 2.44%. So today we'll check into a few more metrics to determine if this is a stock worth adding into our dividend portfolio, or if we should be moving on for something else entirely. An early thumbs up would be very much appreciated, and with that out of the way, let's begin. So the first part we are taking a look into is revenue, and this is here UNP's history for the last 5 years. Back in 2017 they were bringing almost $21 billion on the trailing 12 months. In 2018 that increased to $22.5 billion, a huge quarter of almost $6 billion, plus 9.6% year over year. But then in 2019 it did start to move lower a bit, with $22.3 billion on the trailing 12 months, down from that record quarter by around 7%. And then the ultimate worst quarter was in 2020, with $4.2 billion, minus 24% year over year. But afterwards we saw revenue accelerating up. In 2021 we had it at $20.6 billion, and now in 2022 it is up to $24.4 billion. So after that 2022 crash, revenue has been accelerating up nicely, and in the last 2 years, we have seen 6 quarters in a row with double-digit percentage growth year over year. Now let us take the price to earnings ratio. So back in 2017 the stock was trading at a PE of 18.58, then in a year with earnings jumping, PE went down to 10.10. In 2019 and 20 we saw earnings moving sideways. So we saw the PE ratio at 17.97 in 2019, and then with the price moving higher in 2020, PE went up to 24.12. Now the highest price earnings of the last 5 years were in 2021 at 27.65, but afterwards the ratio has been declining a bit. In the beginning of this year, with the stock price at the highs of $270, PE ratio was still lower at 25.67, and this year with the price moving back lower, we have the price to earnings ratio at 18.15. So after looking into the graph, we aren't now getting that same price to earnings ratio of under 10, which we have seen back in 2018 and 19, but still with it being under 20, it could be considered a decent opportunity of the last 5 years. Now the next part are the number of shares outstanding, and here is the graph that we definitely want to be seeing. Back in 2017 the number of shares out was at 0.8 billion, then in a year in 2018 it decreased by 7.14% to 741 million shares. In 2019 we had it at 702 million, down 5.26%, 2020 under 700 million, 0.677, minus 3.56%, then 2021 650 million shares, minus almost 4%, and with the most recent quarter in we have the number of shares out at 622 million, down 4.31% year over year. So this graph is the best we saw so far, as the company has been continuously buying back shares, without any major slowdown in the last 5 years, buying up to almost 8% of the stock year over year. And after a quick calculation, it turns out that in 5 years Union Pacific actually bought back 176 million shares, which at the current price of around $212 per share would be a stock buyback of $37 billion US, which is now actually 1/4 of the company's current market cap. Now this week we have already looked into UNP's dividend metrics. I will leave a link for that comparison in the description below, but I still want to bring one dividend metric up. That is where the stock's current dividend yield stands against its 5-year average. So we are in my dividend investing watchlist, and here is the tab for UNP. We have its dividend yield history for each quarter of the last 5 years, and on average the stock was trading at a dividend yield of 1.93%. So the worst time to get into the stock was back in 2019 at a dividend yield of 1.42%, under the 5-year average for 26.28%. But on the other hand, if we would be getting into the stock right now at a dividend yield of 2.56%, that is way higher than the 5-year average plus 42.9%. So this could be an interesting opportunity to add in, at least for the dividend yield percentage. Now, if you would be interested in doing a similar analysis on another dividend-paying stock yourself, you are able to access this watchlist by following the second link at the top of the description. Otherwise, feel free to add a ticker symbol in a comment below, and I'll consider adding that into the watchlist myself. Maybe you could share some interesting opportunity available in the market that I'm still missing. So we have checked into the history, but how about expectations? Where do analysts think UNP stock will be trading at next year? On Yahoo Finance, we have information on price targets from 28 analysts. The numbers range from the lows of $177 to the highs of $250 per share. On average, those targets comes in at $215, and currently the stock is trading at $212.99. So this suggests that on average for next year, analysts predict that the stock will be going up by around 1%. Now let's take another angle. Here we have earnings per share estimates for next year. So out of 30 analysts' targets, they predict that Union Pacific will be bringing $11.90 in earnings per share. If we assume that the P ratio remains the same, then for next year we are looking to an increase in the share price by around 3%. So not too much of bullishness, as analysts expect that for next year the price for UNP will only be going up by around 1 to 3%. Now for the next part we are taking a look into Superinvestors. Currently Union Pacific is being held by 5 funds. One recently made a substantial reduction in their position, one of the funds nibbled a bit, and 3 of them keeps on holding. So the reduction was from First Eagle Investment Management. They sold 38.8% of their position, and are currently still holding almost 1.1 million shares, which takes 0.64% of their portfolio. Now the addition was from Gartner, Russo and Quinn, but that was a really small add plus 0.61%, and they now have 18.4 thousand shares, taking up 0.04% of their portfolio. Though the largest holder, TCI Fund Management, did nothing, they now have 5.2 million shares, which takes 3.54% of the fund's portfolio. So even though there was one large sell from Superinvestors, overall I believe they are bullish on it, as many funds keeps on holding onto the stock. Now if we take insiders, that is not something we see often. In the last 6 months insiders made one long transaction, totaling at almost $260,000, but then they also didn't sell even once. So this is the most bullish insider activity I have seen for quite a while. So we checked through fundamentals, but now let us also take technicals. In August of 2020 the stock was trading at around $240 per share, with the relative strength index over 70 at 73, and the lines of the MACD both moving higher. On the 23rd the stock was still moving together with the 200-day moving average, but the buying pressure eased, as we saw a bearish crossover in the lines of the MACD. Then on the 26th we saw the price dropping to the 300-day moving average, closing at around $231 per share, and then with the beginning of September, dropping again to the 100-day moving average at $222. Now there was a bit of a bounce of it, but that didn't last, and in the middle of September the price broke under the 100-day moving average, relative strength index dropping closer to 30 at 36, and the 12-day moving average of the MACD going further apart from the 26th one to the lower side. Another month passed with more redness. We had 2 moving average crossovers, 50 going under 100 and 200 going under 3. But afterwards relative strength index has been moving up, and the 12-day moving average of the MACD is over the 26th one for quite a while already. Currently the stock is trading at around $212 per share, right there under the 100-day moving average. So we'll see if this is a resistance already, or if we'll manage to reach the next step, closer to the 200-day moving average, which is now at $227 per share. So we've checked through the metrics I wanted to take a look into, and now let's make a quick recap of what we found. In the last 5 years we saw that revenue slump in 2020, but other than that it has been consistently moving up. Price to earnings is not at the levels we have seen 4 years ago, but anything under 20 could still be considered fair value right now. The company has been consistently reducing on the number of shares out. In 5 years, that number decreased by 176 million, which at the price we have right now is 1/4 of the company's market cap. They have also been consistently increasing on their dividend payouts, and this year with the stock price moving a bit lower, the current dividend yield is 32.9% higher than its 5-year average. Now analysts don't show too much bullishness, though the numbers are still in the green, where they estimate that the stock price next year will be going up from 1 to 3%, though the majority of Superinvestors continue to hold the stock, and in the last 6 months insiders have only been buying. It seems that the chart is the part I like the least. The stock has been surging up recently, relative strength index is now close to 70, and we are right there at the 100-day moving average, which could work as a resistance for the next few trading days. So I would rather wait for the stock to cool off a bit, looking at a support of around $190 per share. So that was it with Union Pacific. It seems like a decent pick worth adding into, though we already have 3 other names for our industrials exposure: 3M, FedEx and Caterpillar. I wonder if we should switch one of those with UNP, or otherwise if we could just add a 4th stock for more diversification. What do you think? Are you holding, and should we be adding into UNP right now? Share your stance on the stock in a comment below. Also, don't forget to support the channel and leave a thumbs up under the video. Last week I've looked into several other companies, so if you are interested in any of these, then click on a video that is currently on the screen. And that was it from my side. Thank you for watching, and I will be seeing y'all in the next one.